Hey guys, Daniel here, and welcome back to another video. Joe Biden just went ahead and pulled the rug on the stock market by saying he may raise the capital gains tax as much as double for the wealthy. In this video, I want to talk about exactly what's happening, what Joe Biden just said, and the implications that it has on the stock market and your investments. If you enjoy these types of video, guys, make sure to hit that like button and let's get into it. We can see that indices across the board fell very sharply at right around 1 o'clock when Joe Biden initially said, what we're about to read here. We had a bit of a recovery and now we're continuing to downtrend. This is a Dow down 1%, S&P 500 currently down right around 0.9%. And when we look at the NASDAQ, right in line with the other two, down 0.9%. Now, when we talk about what Joe Biden just said, Biden to propose nearly doubling capital gains tax for the wealthy. This is huge news, guys. Doubling the capital gains tax. Let's read more. President Joe Biden will propose nearly doubling the capital gains tax rate for wealthy Americans to 39.6%, Bloomberg News reported Thursday. Combined with an existing surtax on investment income, Bloomberg said that means federal tax rates for investors could be as high as 43.4%. Bloomberg cited people familiar with the proposal. The president is expected to release the proposal next week as part of the tax increase to fund social spending in the forthcoming American Families Plan. Bloomberg said U.S. stocks, obviously down across the board, turned lower sharply on this news. Now, when we look at this news reported by Joe Biden here, this is nothing to look over at. Raising the capital gains tax to potentially 43.4% could potentially mean a rotation out of stocks and into other assets. When we have, a raise in the capital gains tax, investors start to look at stocks and they say, you know what, why would I pay 43.4% tax here when I take out my income, essentially, if I could put this into potentially bonds or potentially into real estate, pay much less tax, and potentially get a similar return, even if it's a little bit of a less return. If you got to pay 43.4% capital gains tax, that is a significant amount of money, guys. And now when we look at what controls the market, the money that controls the market is the money that comes from high income individuals. So when we look at what Biden's proposing here, he's saying we're going to raise the corporate tax rate potentially on higher income individuals. The higher income individuals control the market. Let's be completely clear about this. It's not the small retail investors that control and move stocks. It's the giant hedge funds. It's the billionaires. It's the millionaires of the world. Now, let's take a look at what the capital gains tax rate is as of right now. If your income is from $0 to $40,000 a year, your long-term capital gains tax is 0%. If your income is anywhere from $40,000 to $440,000, your long-term capital gains tax is 15%. If your income is over $440,000 or more, your long-term capital gains tax is 20%. Let's be very clear about this. A jump from 20% to 44% is a massive increase in capital gains and is almost similar to just income tax, which is absolutely crazy to hear. Okay, let's go a little bit deeper into this. Let's say you go ahead and you buy a stock for $100, right? This is your initial price per share. Initial, right? Now, let's say that with time you hold this, obviously you hold it for a little longer than a year, and the value of your share goes to $200. That's your future price per share, right? So we go from $100 per share to $200 per share, let's say a couple years down the road. Now, you have 100% gain on that, right? Essentially, $100 is your initial investment and $100 is your gain. So you obviously take out your $100 here, right? That doesn't really get taxed, right? And your other $100 gets taxed by 43.4%, right? So essentially what we're saying here is if you have $100 in profit on a stock, normally this profit would be worth potentially, right around $80 once you actually end up selling out of it. But now with this move made by Joe Biden, he's essentially saying, all right, we're not taxing that by 20%, we're going to tax it even more to the point where this $100 in profit actually gets cut down to something closer to $55. And when we see this, when investors see this and see the risk they have to take investing in a stock that is actually added on, now that we're potentially raising this capital gains tax, investments like real estate become much, much more attractive, which is why we're seeing the indexes crash as we speak. Now the Dow is down 1.14%, the S&P 500 is down 1%, the Nasdaq is down 1.1%. Obviously, we'll see what happens throughout the day, and we're not sure if the season is even confirmed at this moment in time, but the fact still remains that an increase in corporate tax, or not corporate, an increase in capital gains tax, this could mean a major downtrend in a lot of these high growth names. For example, a company like Tesla. This is obviously one of the leaders in the stock market at this moment in time, now down 3% today. It's companies across the board that are going to essentially get hurt because of this increase in capital gains. Now, please let me know what you guys think. We covered a potential increase in the corporate tax rate just a couple of weeks ago, and now we're looking at a potential increase in actual, potential capital gains tax, which could really lead to a downtrend in the stock market. Anyways, guys, let me know what you think. We could definitely see this rotation out of the stock market continue over the next couple of days. Given this news that we have just received, it is not bullish whatsoever, unless we get Biden, within the next couple of days here saying that, maybe we might pay it in some sort of different way. But at 44.4%, guys, damn, I don't even want to think about this. This is one of those days where you just go on a walk, Anyways, guys, thank you so much for watching. I really appreciate you being here, and see you guys next time.